So the idea, before I give you the actual drill, is for us to figure out where each of these accounts increase. Okay, I have arranged these accounts in a certain order that will help you out for the activity for today. Okay, so what we're trying to do is, where does each account increase? And I have the types listed right here. So if we look at assets, assets increase on the debit side. So I have that arrow to show that it increases, that they increase on the debit side, right? Now, expenses, where do expenses increase? Not sure if you remember, but expenses also increase on the debit side. Okay? Purchases, purchases also increases on the debit side. Return inwards, that also increases on the debit side. Drawings also increases on the debit side. Okay, so you can see a pattern right there that these accounts, they all increase on the debit side. And I will tie this with the activity for today. But first, you need to make sure that you know this before we proceed to the activity, okay? So all of these accounts increase on the debit side, okay? We're not looking at where they decrease. We only want to know where they increase. Now, where do the rest of accounts increase? Well, liabilities, they increase on the credit side, okay? Capital share the same rule. Capital increase on the credit side, okay? Revenues, same rule. They increase on the credit side, okay? Sales, same rule. They increase on the credit side. And return outwards, they also increase on the credit side, okay? So these are the rules we have learned for the past few weeks, okay? The multiple chapters we have completed. This is what you should know, okay? You know where each account increases. Now I want you to pay close attention to the following 40 accounts that I will highlight for you here, okay? Those 40 accounts that I have highlighted are very, very important because they are all considered assets. However, we spent an entire chapter covering these 4 accounts because they have unique rules when it comes to inventory. Okay, so I want you to keep that in mind, okay? Keep those rules in mind. Now, let me go to the activity for today, okay? So if you look on this side of your screen, this is exercise 10.7, and you will notice that we have a list of accounts and their balance. Okay, we have the name of the business and we have a date for the trial balance. But we do not have access to the T accounts, and we need to prepare a trial balance. So how do we do the trial balance without the T accounts? Well, you need these rules, okay? If I go here, for example, to assets, okay? And if you look at your notebooks, you look at the different T accounts that you have, if you take any of the asset accounts, for example, cash or bank, you would notice that the balance brought down is on the debit side, which is where the account increases, okay? If you take any expense account, any of the previous expense accounts that we have done in this class, or 10.4 or 10.5, perhaps you can look at those, you would notice, first of all, you should know that the expense account increases on the debit side, and you would notice that that particular expense will have the balance brought down on the debit side, okay? If you look at liabilities, at any liability, a loan, an accounts payable, okay? If it has a balance, okay, you would notice that that balance brought down is on the credit side, which is where the account increases, okay? That's what we're trying to do here. So using The rules I just gave you here as to where each account increases, we will prepare our trial balance without having access to the T accounts. We only have access to accounts, which are on this side, and then we have the balance on this other column. Okay, so the name of the business, Miss Anita Hall, trial balance as at December 31st, 2017. That information is given to us right here. And I have the same accounts listed here. I have my two columns, debit and credit column. Now, at this point, you should know exactly what type of account these are in order for you to predict where the balance is on. Okay, so let me start with the first one, plant and machinery. Plant and machinery is an asset account, okay? Because that is an asset account, we know that it increases on the debit side, hence the balance brought down will normally be on the debit side. So I'm going to record that same balance that I have there on the debits column, okay? If we look at motor vehicles is also an asset account. Where do asset accounts have or increase? On the debit side. That means that the balance brought down normally would be on the debit side. So I'm going to record that balance on the $6,000. Premises, it's the same, okay? It's an asset account, so I'm just going to go ahead and record that balance on the debit side. So the first three accounts fall in the same category. They are assets. Now wages is an expense account. Expense accounts, they increase on the debit side, so the balance brought down should be on the debit side. So that is 42,840. Purchases is an asset account, but it has a unique rule, right? However, they increase on the debit side. So in this case, purchases will also have the balance brought down on the debit side. If you see me punching in the wrong number, let me know. Where are my purchases? The next one is sales, okay? Sales, the chapter we covered, we said that sales is an asset account, but it has a unique rule, right? Which we have here. You know that sales will always increase on the credit side. So very likely the balance will be on the credit side as well. So sales, credit side, that would be 179,744. Okay. Rent received. Rent received is a revenue. Do not confuse this with an asset, okay? Rent received is a revenue, okay? So revenue accounts, did I record revenues here? Do I have? Yeah, I do have it. So revenues increase on the credit side as well. So that would be 3,360. And then I always tell you, right, guys, make sure that you separate your expenses. However, in this case, you will notice that this particular drill joined 3 expense accounts, but they are named properly, so that would not be a problem. They have telephone, printing, and stationery, but it's one expense account, but they combine several things together. So expense account increase on the debit side, so very likely the balance brought down would be on the debit side. So I record the balance that I have here on the debit column, 3,600. Accounts payable, liability, credit side, 27,200. Okay. Accounts receivable. Accounts receivable, okay, that is an asset account. Asset accounts, debit side of the T account. So it will be on the debit column of this trial balance, 30,440. Bank overdraft, I told you at the beginning of the first semester that bank overdraft is basically like a loan, right? So you know that's a liability. So liabilities will have the balance brought down on the credit side. So I'm going to record the balance brought down on the debit column of this trial balance, 2,216. Capital, credit side as well. 131,250. Drawings, went over that rule in this chapter as well. You know that the balance, it increases on the debit side, so the balance brought down will be on the debit column of this trial balance. So that's 10,680. General expenses, you know at this point that will be on the debit side. That is 3,584. Okay. Lighting and heating, that is an expense. Expenses will have the balance on the debit side. So I'm going to record that on the debit column of this trial balance, 2,960. Hopefully I did not punch in any wrong numbers, or else it will hunt me back right now. The last number, and let's hope that this will balance off, because you know that's the idea. Motor expenses should be on the debit side. So 2,360. Voila, right here. So it balances out. The two totals are the same. So this right here is correct. Okay, that is the idea. You need to keep in mind these rules in order for you to do a trial balance, like what I did here, without having access to your T accounts. You can predict these things, okay, or the balance rather. Now, there will be instances whereby, for example, an asset account will not have the balance brought down on the debit side. Let me explain. For example, if you take your bank account, okay? So let's say that you take your bank account, and let's say that at the bank you have negative $200. So you do not have money. So when you have no money at the bank, this will be one unique instance whereby bank will not have the balance brought down on the debit side, because you have a negative at the bank. So in this case, the balance brought down for this particular account would be on the credit side. And if they do not give you the T accounts, they will give it away here. They will tell you bank credit balance, and you know that bank would have the balance on the credit side. But if they do not include that, then chances are that it's not a negative number. So this rule will stand whereby assets, including bank, will have the balance brought down on the debit side. So you would need to write the balance brought down for that particular account on the debit side of your trial balance. Any questions, guys?